Happy Aloha Friday, traders. It's Joseph Wagner here on August 1st, 2025, and you are watching the Daily Report for Gold and Silver, our weekend review. A plethora of events and reports to unpack today. Let's start with the jobs report. Only 73,000 jobs added in July, far beneath analyst expectations. That, along with the ISM manufacturing report hitting a 6-month low today, weighed heavily on U.S. indices, as well as dramatically shifted traders' expectations for rate cuts. It is now widely anticipated that we will get our first rate cut, according to the CME's FedWatch at the next FOMC meeting scheduled on September 17th. You can see it is a 90% probability now we're getting a rate cut. Just yesterday, that probability was 37.7%. So a dramatic change in the sentiment regarding future monetary policy. And that was based not only on reports today, but also the August 1st reciprocal tariffs. America's biggest trading partners, Mexico, Canada, China, still yet to sign an agreement, as I spoke about earlier this week, to not rule out the chance of one more parabolic spike, especially with August 1st vastly approaching. Still, our average tariff rate rose to above 18%. Trump essentially played the drunk uncle Little League game today, if his kid was the U.S. economy. When the jobs report came in at a low 73,000 new jobs added in July, below expectations, but even more so, the referee in this Little League game, the Bureau of Labor Statistics, had to sharply revise their June numbers much lower. Trump said, "Ref, you're cheating," and he fired the top Bureau of Labor Statistics official.
You're fired. You're fired. But by interrupting me when I'm knocking in, what are you doing to yourself?
Because I'm being truthful and I'll always be truthful.
How stupid is that, right?
Trump claimed the ref was blind and the numbers were not accurate. This led to the largest single day drop in the US dollar since April, because the three countries still on the table, Canada, China, and Mexico, are the three biggest trading partners America has. The vast majority of an effect on the U.S. economy has yet to be determined. And that is why today's August 1st deadline did not bring about any certainty at all, but quite the opposite. So that brought down the dollar, of course, which, along with safe haven demand, brought gold much higher. To assess where gold may first find resistance, I have just put up on the board our major moving averages along with the 20-day simple moving average. The 50-day simple moving average was resistance, however, got a close just above that, and I have a feeling it will hold. And we also managed to successfully break above the 100-day moving average, which gold pricing had been above since January. I'm leaving up the 20-day simple moving average to make a point. I'm going to put up our Bollinger Band, and I left that 20-day up to illustrate how the 20-day simple moving average is the midpoint of a Bollinger Band using default settings. You can see that gold effectively bounced off the bottom of this Bollinger Band and broke through the midpoint. With that in mind, gold will, I believe, break above the upper portion of the Bollinger Band, and that would take us to around 34.84. I believe that is easily obtainable in this current run-up, and this midpoint, or our 20-day simple moving average, should act as support if that is the case. So, if we look at our current fib retracement, we thought gold was going to test $3,300, close to that, missed it by about $17. Looking at this retracement, we can see that before we breach this upper Bollinger Band, we have one more area that could act as technical resistance. That is this 23.6% retracement at $3,445. It has been resistance recently on Monday, and I believe we have a very good shot at a new all-time high, possibly the last one before gold enters into some sort of corrective phase. This has been Joseph Wagner, wishing you as always good trading. We will talk to you again next week for our next video report. Bye-bye.